Welcome back, traders, to another video. This week we're going to be doing a trade breakdown analysis. This is going to be fully in depth from the beginning to the end, to where my entry was, stop loss was, where the take profit was, where everything was. I'm going to go into full detail so you can see everything that was done and how we secured basically a perfect pip entry and almost a perfect take profit as well. So this trade worked out beautifully. So let's just jump into the charts and let me just show you what I did. All right, so we're in trading view and now we're going to go into detail on exactly how it all played out, where the entry was, where the stop loss was, where everything was, right? So we're going to start with the weekly time frame, okay? Weekly time frame is clearly bullish. There's really nothing to talk about here. Just several bullish candlesticks all in one row, and we waited for the retracement back into this upper area of interest. We go down to the daily time frame, very similar market structure that we're looking for. We see that it was bearish and then it broke bullish, right? It broke above the previous market structure point. So now we are in bearish momentum on the daily. So weekly is in confluence with the daily, both are bullish. Now we're on the 4-hour time frame, and now we can just simply wait for a shift of structure on the 4-hour time frame, right? So we can see we were previously a bit bullish, honestly probably still bearish technically. And then we shifted bearish, and now we're waiting for a bullish move, right? We want to have almost all of our time frames in sync. It's not required that we have all three in sync, but it's definitely a higher confluence when we have the weekly, daily, and 4-hour all lining up bullish with each other, right? So now we just simply wait for market structure to happen, for it to push to the upside, and we wait for the retracement after. So here we go, boom, we have a push to the upside, right? All the way up to the top of the push, and we start to wait for a bigger retracement back down. So this is the point where you have to understand, where is price going to end up and where do we want it to end up, right? So we have our area of interest down here. We have our EMA lining up on the 4-hour time frame. We should be suspecting that it's going to retrace even further, right? We bring out our Fibonacci tool. We go from the bottom of the push all the way up to the top. Right? It doesn't have to be exact. A lot of people will ask me, oh, but you know, why didn't you put it here? You definitely could have. There's nothing wrong with that too, but you could see there was no entry opportunity simply because price did not retrace far enough into our 0.618 zone. So we put our Fibonacci all the way to the top here. I like to do it to just more general pushes, even if it's not perfect, right? If it's just a general big push upwards, then I like to keep it all the way up there. So now we have our layout set up for the Fibonacci tool, 0.382 zone, 0.5, and the 0.618 zone. Here are some of the settings in case you didn't watch the other video. I have a whole video explaining on how to use the Fibonacci tool. So you go ahead and watch that. That's right here. And then here are the settings for the Fib tool right there and there. So go ahead and pause that and copy it if you want to. Now this is the point where we start drawing up our demand zones, right? Where do we think price action is going to bounce off of, like the highest probability, right? That's what we're looking for. So we start on technically the daily time frame, but there really is nothing here. It's all the way up here for the daily, so we just kind of ignore that. 4-hour time frame, we can see our demand zone is right here, right? Lining up almost exactly with the 0.618 zone, okay? Then we drop one more to the 2-hour, and we can see our demand zone is here. And then we drop one more even further into the 1-hour, and we can see our demand zone is here. So that's the 3 demand zones that we have lined up, right? And you could drop it even one further into the 30-minute, but then it just, you know, that's a little too small of a time frame when you're looking for this big of a push, right? Then you're getting a little too niche, because now you have it all the way down here, and then it'll start to mess you up later on when I start to explain the entry, right? So I just kind of ignored the 30-minute, anything lower than here, because this honestly just looks like a quick liquidity sweep, right? We just grabbed liquidity from underneath this push to head to the upside. So I'm not too worried about that. I'm more worried about these higher time frame demand zones that are lining up with each other alongside the 0.618 zone. So we go back up, so let's wait. And now this is the part where we start to consider, where do we want our entry to be? So here we have the push. Actually, if I'm not mistaken, I might have had my Fibonacci sequence here, right? Just a quick little edit. We wait for the retracement back. We can see it starts pushing back. Now we enter, or now we decide where do we want to enter, right? So here we have 2 options. We could do the 4-hour demand or the 0.618 zone. I think those two are the most likely area where it's going to bounce off of, simply because they are lining up almost to the exact pip with each other. But it's not as confluential if you put your entry all the way down here, right? Now you're trying to shoot for something that's going to give you, a 7-to-1 risk to reward ratio. We're not looking for that type of move, right? We want to put our entry at the point where it's most likely going to bounce off of. So in this case, it would be the 4-hour demand zone, right? So now we just simply wait for the market structure to shift to happen, right? So here, boom, we are technically entered into the trade. We set up our buy limit and we are entered into the trade, and we could see how exact this entry is. Literally to the exact pip. Look at how close that is, bro. That's literally, you entered in, you went down, a couple bucks in the drawdown, and you just shot up into the profit. So that's how exact these entries are, right? They're so precise, and especially within this golden zone, the 0.618 zone, lining up with our demand and supply. It just works out perfectly, whether you're going long or short every single time, right? Not every time, most of the time, okay? But where do I put my stop loss, right? That's a big question. Oh, my speaker just fell asleep, so sorry for that. But where do I put my stop loss? That's a big question a lot of you guys ask. In this case, there's two kind of areas where you can put it, right? So I always tell you guys, put your stop loss below all the opportunities where price might bounce off of, right? So if we don't want to put our stop loss here because it might retrace back down into the 2-hour supply zone, right? Then it'll wick us out before going into the profit, and we'll be mad. Don't want to put it here because it might come to the 1-hour. It might wick us out and then go into the profit, and we'll be mad. So in this case, I put it all the way down below the 1-hour time frame, right? So right around here, or if you want to line it up to almost the exact pip, I like to do it basically a pip or two, or a couple pips below the lowest possible point where it's going to retrace from. You could also put it all the way down here, right? This is a little bit more of a long-term trade. You want to hold this one maybe a little longer for more profits, but you have a very big stop loss, right? You're saving yourself a lot of room in case price does retrace all the way back down here, and you can put it below these lows and below this area of interest. But at that point, so much turns bearish at that point that I'd rather be out of the trade and get higher reward once we are in the profit, once we do bounce off one of these zones. So that's why I keep my stop loss a little tighter for this trade specifically. Also, we're entering at a point that's pretty high above our area of interest, so there's a chance that it may just continue upwards from here. It doesn't want to come back down to our area of interest. So we're keeping our stop loss below the supply zones, or demand zones, my bad. And now that's simply it, right? We just let it go all the way up to our profit. And now why here? Why is this our profit, right? It's pretty simple, right? We're just keeping profit basically at the highest structure point that we want to reach. That's very close. Or we go all the way up to the exact tick on where our Fibonacci sequence was. That's kind of where I like to put my profits. If you want to, you could even set and forget a little bit more and try to go for a little bit higher. But in this case, this was probably the most exact exit that you can get, because let's see what happens right after. It's not looking too pretty if you tried to set and forget and then you're in drawdown now after you could have been up a 2.7 to 1, right? So that's why we always just kind of leave our take profit to the exact pip of where the high was, or to where the top of the Fibonacci sequence was. And that's basically it, right? That's basically everything. And we could even see how well it even used the 4-hour EMA to reject off of this point. This entry is so precise, guys. Like, I literally can't explain it to you how precise this demand and supply zone entries are. You get down to the exact pip, the perfect rejections, all the way down, and you're instantly in profit. It's the best feeling ever. So that's definitely one of the best entry models that I'm so glad I've developed into. And yeah, that's basically it for this trade. That's an easy 2.7 to 1 risk to reward ratio, or 1 to 2.7, whichever one it is. Thank you guys so much for watching. I hope you learned something about this trade. It helped you in your trading analysis and trading a little bit better, maybe with a better entry, or where you want to put your profits, or where you want to put your stop losses. So if you have any other questions, you can always hit me up on Instagram or in the comment section down below. Don't forget to subscribe, and have good luck trading. Have good luck trading next week, and I'll see you guys in the next one. Peace.